Hi everyone. So today I'm gonna be answering the question, when will the stock market crash? Well, the short answer is not anytime soon. So, on first glance, if you look at the general stock market (SPY), it just keeps climbing higher and higher, and one would assume is like, hey, this is going pretty parabolic. Um, we're overdue for a crash. And you might be right. Like, it does look parabolic. It looks crazy. It does seem like it needs a pullback, but one of the things to take into account is the inflation rate of the US dollar. And if you know that, then you'll be able to more accurately predict when these drops occur. And it'll also give you a sense of why the stock market tends to go higher and higher and higher. So first, this is the inflation rate. If you use this formula, this measures the total money supply in the entire world. So how much you can tell, like, let me go ahead and put this on a line chart. You can tell that if you put it on just a percentage basis, the US dollar has lost nearly 96% of its value since 1914, since World War One. And you would want to see how that affects the underlying value of each of the individual stocks, because if you have more US dollars in circulation, right, then you would need more US dollars to buy one version of one stock. So you would have to include that inflation rate into a stock. So for example, if we take a look at Apple is straight parabolic, right? Let me go ahead and put this on the candle. And if we apply it with removing the inflation rate, just the value of Apple alone, where is this? So I'm just going to go ahead and type it out. WM2NS. Apple has done well even excluding inflation. So, and that makes sense, right? Apple is the most valuable company in the world. And you can see it based on other stocks. So for Disney, right? This is Disney with inflation. It just seems like it's going to keep going higher and higher. But if you apply inflation remove the inflation rate out of it, now it starts to look a little bit different. So let me go ahead and show it back and forth. Disney without inflation, Disney with inflation, Disney without inflation. Now it doesn't seem so great. Like, as an investment, as a stock, is like, how much were you really making? What was your actual value they actually got? So you can imagine it's like, oh, I bought Disney at, go ahead and take this percentage. Go ahead, Disney. Let's say 10 years ago. Suppose 10 years ago you bought Disney, right, at $40, and your assumption would be like, oh well, 10 years ago I bought Disney for $400. I made 3x my money. But did you really make 3x? Considering every year the U.S. stock market loses 2% each year. In reality, if you go back and measure it, you didn't really make all that much. You made a total value of about like 60 something percent. So you actually didn't make 3x. It's just that the purchasing power has gone up by that much. There's that much of a difference. So that's an example. So now if we just use that, you apply the inflation rate on top of the general stock market, then you begin to see the difference, right? So this is how the general stock market looks like, SPY. Right, just keeps going up, and then this is with it minus the inflation. So using technical analysis, this is a triple top. So the likelihood of it going down is very unlikely. So it's most likely going to go up. So, but we will get rejected here, which means that to answer the question when, if we just assume that it's going to keep climbing up exactly the same rate as this, then I'm going to go ahead and use a ghost feed. Then we're probably going to get there, it seems like, go ahead and clone it, into late 2024, early 2025, right? If we include all of this waiting game in there, it could be as late into 2026. So although that's not an exact time frame, it does look like a full-on stock market crash is not likely to happen within the foreseeable year. I mean, we might have this, right? Right. We might have this drop, or we can have drops in between. But a full-on stock market crash is not likely until, 4 years or so. So that's the short answer of it.